Good morning, everyone. Going to have a look at the TED spread today, and after last week, which was pretty dead for a good 4 days, Friday really started to move the markets a bit, as initially there was rumours about downgrades downgrades from S&P for France and a few other European countries, and the euro got absolutely smashed on that, and as the rumour gained more and more credibility, the strength of the moves got stronger and stronger, and the Bund actually hit above 140 for the first time, and it actually had a big 25 tick stop as it breached 140, and then as you would expect, the TED spread blew out. If we look at a chart right now, this is the Sep 12 Euribor against the March 12 Shatz, and if we look, right, we were trading quite nice, well, you know, what is a good range now in the TED, which is about 10 ticks, and we were trading pretty sideways, and it was working pretty well for about a couple of weeks, as you can see. You know, if you just stuck to the ranges, you'd be doing pretty okay. But then, as you can see here, all of this pretty much happened on Friday, where we had a big move up to the upside. From Friday afternoon, we were trading 81s, and then we went as high as 8.5 today, which pretty much is a 27 tick move, which is huge in the TED. And as you can see, it broke out as the Shatz pretty much weren't moving. Euribors all went very big, as what do you call it? First of all, the sign of another rate hike is gonna, it's basically pretty much being priced in. Because if we look at Sep 12 right now, we're trading at 99.24.5, and with rates being at 1% right now, that's pretty much 100% probability that we're going to get another 0.25% rate cut. So with the Euribors going up there and the Shatz not really moving as much, because if we actually look individually at the Shatz chart and we just look at it over 60 minutes, we've sort of hit a floor in the yield, and as you can see over here, right, we've been trying to test this 110, 141, 143. It's just not gaining much traction above it, because yield wise this is about as high as it looks like the Shatz is going to go. We've been testing these levels for absolutely ages now, and even with the big move that we had on Friday, with the Bund went 140.20, 140.30, Euribors all went through the roof as well, but the Shatz just weren't really moving that much, and that's what caused the big move up in the TED spread, as yield wise doesn't look like the Shatz is going to gain any more traction higher, and the Euribor did, because usually in what you would expect, and why this was a bit of an unexpected move from what I'm used to, is because with the TED normally, if you get any credit downgrade, you'll normally see the spreads fall as the Euribors get sold off, since that is AAA corporate debt against government debt. So most of the Shatz normally being the government debt, you would have more people jump into there. But this time, it actually the opposite happened. Rather than people jumping into government debt, people just pushing up the Euribor more and more. And even today, if we see, the Euribor was up 3 ticks today, and the Shatz is only up 1. And but the thing is that I can't, seeing this now, the Shatz seems to reach a floor, and with the Euribor, it all depends where the ECB goes here. This TED could keep on going higher if expectations rise that we might even go to 50 basis points for the rates from the ECB, but right now 75 looks pretty much a certainty as far as the futures markets are concerned. So that's the sort of thing that we need to look out for. But short term, I do reckon that we're going to sort of, as just general fluctuations play out in the market, that we're going to go back. It looks like we're we're going to be playing back into this range. We sort of bounced off 8.5 previously, as you can see here, and even over here too, it turned out to be a very strong level, this 8.5 point. As you can see, we sort of bounced off it many times and we kept coming back to 97.5. So there's a lot of action over here, and once we bounced off over here, which was about 2-3 weeks ago, off 8.5, we came off a good 30 ticks, and then we stayed in a range, and now we're back up to that 8.5. So it looks like 8.5 is a very, very strong level. So I think anywhere up here is definitely a good short. Coming up to these 97.5s, then we might just start playing around in this range until any more news comes around. But a significant break above 8.5, judging by previous levels, I think we, worst case we might get a couple of ticks up above it. But I think as far as yields are and as far as expectations are right now, I think 8.5 seems to be a good level, and we'll probably only go significantly higher if there's increased expectation that we're going to go above, that we're going to cut to 50 basis points. Well, so until next week we'll have another recap and see where we've gone from there. Take care.